Nolani, you gonna stay here, doggy? You gonna stay here? I know. I love you very much. I don't like to leave you at all. But we're gonna go today. We're gonna go work in adventure tourism, which is such a great industry to work in. I love working in adventure tourism. Today we're working on the boat. We're working on the boat. It's actually Thanksgiving when I'm recording this. And go surfing this evening. I have a couple friends over. And let's get it. I'm still waiting for my new car mount to come in off Amazon. That should be here by next week. And I can stop holding the camera, which makes it shaky and whack. But just listen. Okay, sup investors and traders. This video, I'm gonna tell you guys why it's so important to have a bear market filter on your trading system. So important. And the reason why is the world can change in unexpected ways over the coming decades and centuries. And examples of that might be, did you know that one of the greatest bubbles of all time was the Japanese stock market and real estate bubble in the 80s? It popped in 1990, and the Nikkei 225, or the Japanese stock market, it didn't make a new all-time high until this year. It took 34 years to recover. It was down for decades. By the way, check out the surf. Looks a little bit more inside. Probably go surfing later though. Looks all right. So in the case of the Nikkei, if you just keep trying to buy the dip, you blow up. It might not have recovered. There's been times in history, the US stock market, the Great Depression went down 90%. But I mean, even more, there's times in history where stock markets go to zero. And that's something that could happen. I'm not predicting it, but I mean, imagine these different scenarios. You're invested in US stock markets, and the US goes into a major decline, the decline of the West, corruption and morals, civil war, I don't know, everything moves overseas, the production, there's a currency crisis, and the stock market heads to zero. I'm not predicting it, but I'm saying these sorts of things can possibly happen. You need a way to not be trading and buying the dips on the way down, right? Here's another example. Maybe gold gets demonetized by Bitcoin. People just agree Bitcoin's a better store of value. Maybe in the future we were able to mine other planets and suddenly there's a massive influx of gold coming in from meteors or something, or like a meteor hits Earth that's full of gold and it doubles the gold, and like gold just goes into this bear market it never recovers from. Again, I'm not predicting it, but it's something that could possibly happen at some point. Or it could be Bitcoin. It turns out quantum computing hacks the keys and they're not able to update the code fast enough, and it becomes a security risk and everybody flees and Bitcoin goes to zero. Or the block subsidy isn't able to secure the network and there's a crisis and they have to inflate the money supply in Bitcoin to keep it going. Not predicting these things, but they could happen, and then Bitcoin just slowly goes to zero, right? You need to be prepared for various scenarios, so the bear market filter prepares you for those. And there's also just less severe bear markets where it goes into a year or a couple years of down, and you just don't want to be in the markets during that time. But you never know when, you could also pick some asset, some company, like a company could go bankrupt, right? An individual crypto coin could go to zero. A country could have a currency crisis. These sorts of things can happen and do happen. So I'm curious, for you, what do you think is the best bear market filter? But what I use and what is computer back tested works hundreds of years across assets, gold, NASDAQ, Dow Jones, silver, S&P 500, international stock markets, Bitcoin and ETH. Robust back tested is just using simply the 200 moving average. If you simply, and this is also important, the back testing on weak assets. If you simply don't take longs under the 200 moving average, whether that daily, whether that's the simple or the exponential, doesn't really matter. But the point is just having a filter that gets you out. And you're gonna miss out. If you have a 200 moving average filter, you'll never buy the bottom, right? Because the bottom happens under the moving average. But you'll also never be buying and holding something as it goes to zero, right? And that's more important. You can make your money in quick bursts as price rises and just sidestep those long declines, which you don't know how long they'll last. Most of the time with the best assets, they last, what's an average bear market is less than a year, right? It's not super long, but especially if you're trading riskier assets like individual stocks, those can go to zero. It's possible, right? I mean, look back, a lot of the companies from 80 years ago are not around today. They went to zero, right? And it's going to be the same with a lot of cryptocurrencies. I can't tell you which ones it will be, but you need to protect yourself, especially if you're concentrated, have concentrated positions. And the best way to do that is through a filter. Now, if you want to see the back testing for yourself, or fiddle with the back testing yourself, turn that filter on and off, see how it goes. Trade along with me as we trade the markets in this way. There's a link down below, demo to my trading system. So you go check it out. Appreciate y'all, and hope to see you on the inside trading along with me. Okay, peace.